Good morning. It is Thursday, March 14, 2024. Today the big mover is at 8:30, I think. Is the PPI and jobless claim and all that key economic indicator that can move the market. So watch out. We'll find out in about an hour and 13 minutes where the market is heading. But for now, let's take a look at some stock worth talking about. Alcoa at the key spot here. The last time it met the 200-day, it was a fake move, right? You got this breakout, oh my goodness, and then you got this nasty pullback into earning, right? That's unusual. I would have figured that it would have run higher until earning, but apparently somebody knew something to cut the rally short, literally 3 weeks into more than 2 weeks before earning. That was nasty. And then of course earning came out and it was not anything exciting. Basically it's a big range, okay, from the area of between 26.5 to 30.5 is like a big zone of consolidation. All right, I mean, if I wanted to, I could call it this entire thing in as a zone. So if it can break out of the zone, I wouldn't go bullish yet, right? Because it's already break out over the 200-day yet. To me, it need to get over this here. Now, why is this such a bad area? It's not random, okay? I'm going to start doing the zone here because I think the reason why I didn't draw the zone down there because I think there is a bigger area that it needs to absorb. Let me draw this in first, and then let's go 3-year chart to see if it confirms what I think. All right, I can see it. Can you see it? Basically confirm what I thought. Yeah. See this right here? This right here. That is one key support. Okay, look. There's a reason why I didn't care to draw the zone down there, even though there is a zone down there. But this is key here. That spot right there. There is not a surprise that there's a constipation in this area right here. And then the last time it got back there, swift rejection. Now it makes sense, right? A lot of time when you're looking at the 1-year chart, it doesn't tell the whole story. And then bang, once you zoom out, it makes perfect sense why it rejected here. All right, so once again, if you want to go long because it's over to 200, you can, but watch out. All right, watch out. Now, like anything else, once and if you can break over this, then it can go, right? It can go. But for now, if you're long, that's your target to exit or at least trim a lot of it. Since we're talking aluminum, let's talk about the disaster du jour yesterday. X, steel. What happened? First of all, this big gap up is merger acquisition news. Nippon Steel. Okay. Nippon Steel. And then what happened? Biden expressed concern. So this might not happen, right? So it came down almost. Oh, is it to the gap fill? Basically, give or take a few penny. Okay, because the gap fill was, let's see, the high, the low is 39.72 yesterday, 39.86. Okay, so 14 cents. My goodness, close enough, right? Now Where would I play this? Would I dare? No. What I would do is, if there is any juice, which I have not looked, do a 35-30 put spread down here. Okay. I think this zone right here, I'm going to draw in a zone. It's going to be key support for X, okay, because it gap up long 2 months plus of consolidation here and then go, right? So if it continues to dump further, then I would look at doing like a 31-25 kind of spread. That's kind of far, right? So we'll see. For now, 35-30 spread is what I have in mind. If there is any kind of juice for perhaps, well, tomorrow is Friday, maybe next week. But if there is juice further below, like 33-30, I'd rather do something like that, because 35 is still above the 200-day moving average. I want to use the 200-day moving average as my protector. Okay. McDonald's, the other disaster du jour yesterday. I saw a put spread for next week, right? I don't mind owning McDonald's down here in the 280 and below range. I have an order to buy some share at 282.5. I took it out. I figure weakness in China is the reason. I took out the order to add a few share at 282.5, but sell the put spread instead. And yeah, I wouldn't mind owning McDonald's down here. Not at all. Better to own here, sell in the 290 to 300 range. That's the play. But yeah, so if you have exposure to something like Starbucks, you might be worried a little bit, okay, because of China weakness. But I think that's temporary. Who knows what can cause that early weakness in China last week, last month? Perhaps Chinese New Year celebration is a big deal for China. Chinese New Year, right? The last couple of weeks. I mean, would you go celebrate Christmas at McDonald's? Is American running to McDonald's for Christmas? I don't think so. So maybe part of the weakness is the celebration is not at McDonald's. All right. Who knows? What do I know? I'm trying to use some common human logic here. So basically what I'm saying is the weakness in China is temporary. That's why I don't mind owning McDonald's at 280 and below. Before I go, earning today, ADBE. Definitely worth sitting down to trade after hour if there is an opportunity, right? I trimmed yesterday. 585. I have an order that's set there and it triggered. I take it. Would I buy today before earning? No, I'm gonna wait to earning, right? I'm gonna wait until earning. Where would I have an order in? I would have an order in at 558, right? 550. I would have two small order in after hour, just in case of a nasty week on earning. Last time, well, let's see what happened last earning. Is there any nasty week on last earning? Not really. Well, yeah, it is. Look, yeah. Last time there was earning, you have a move from, let's see, 618 down to 593. Decent size, yeah. So yeah, about the same distance as where it is right now into the 200-day moving average. This thing, the 200-day has been the protector, right? It has been bouncing off that. So yeah, as far as after hour, you bet I'm gonna have an order right there, 550, and even one lower for the overshoot. So right now, I think my plan is 558, 550, and then one at 545, and perhaps even one lower. But for now, that could be the three order I have for after hour for any kind of nasty week. I do believe Adobe will be one of the few long-term winners in AI. Okay, I like the company. I like the product. And that's it for today. Uh, have a wonderful day. Let's see what the PPI will bring. Hopefully, good news. Bye bye.